Whether it's your own strategies or whether it's a system you've recently purchased, there are a number of factors to consider when conducting your own backtesting. First of all, you should take into account the quality of data. Before conducting any backtest on the MT4 platform, you should download all of the data available from your broker's live trade server. This is easily accomplished, but you'll only get about 6 months of reliable 15-minute data and only about 2 months worth of clean 1-minute data. However, this data is exactly the data used in live trading on your broker's platform. Here's how you download the live data. First, open a new chart for the first of the euro or US dollar crosses. Then remove the grid lines, change the chart to a line graph, and zoom all the way out. Starting with the daily time period, hold down the Page Up button on your keyboard and allow the chart to scroll back at least as far as the period that you're interested in testing. Repeat this step for H4, H1, M30, M15, M5, and M1. Be aware that M1 may only take you back a few months, which will limit the length of the backtest if you use the every tick testing model. When you're ready to move on to the next pair, just go to the Market Watch window, click and hold the new pair, and drag it to the chart. Then repeat these steps until you've gone through all of the pairs. If your system trades on the 1 hour or above time frames, and if it enters trades only at the open of the current bar, then the open prices only testing model will work just fine, because there's no interpolation for the open of a bar since it occurs only once. The second consideration is the start and end dates. Ideally, you should conduct your backtesting with a variety of starting and end dates. This gives you the opportunity to see how robust your system really is. If it's performing like you want it to most of the time, then it's fairly robust. But if the results are erratic, you're going to need to find out where the system is failing. Usually a look at the chart areas where losses took place can give you some idea. If the prices were range bound, you'll have to see whether you need to filter out those areas or whether you should tweak your settings just a bit. The final factor when conducting your own backtesting is the purpose or reason that you're performing the test. So, for example, let's say that you want to observe and evaluate how various strategies perform under the simulated trading conditions provided by the MT4 strategy tester. For example, let's suppose that you've developed a trailing stop loss that is non-arbitrary in nature. That is, it doesn't rely on a certain number of pips, but on some other market or price-based factor that your EA calculates internally. You're going to want to know if this works correctly and how using it affects your profitability. So set the strategy tester to visual mode and click on the start button. Now you're watching a bar-by-bar video of your system's performance. You can see exactly when the entry takes place, and more importantly for this particular exercise, you can watch your new trailing stop loss ratchet up with each succeeding bar. At the end of the test, you're going to have a pretty good idea as to whether or not the stop loss is functioning properly. At the end of the test, you're going to examine the equity curve and the statistical report generated by the strategy tester to find out that your new strategy has the potential to increase your bottom line by 30% while decreasing drawdown from 11% all the way down to 6.5%. After several more tests of different starting and ending dates, you find that on average you're obtaining a 27% increase in profits while cutting your drawdown to an average of 6.7%. Now you can feel confident that your strategy at least has a chance of succeeding. Let's continue on with this example and say all of your test results showed your profit cut by an average of 40% and your drawdown average went up to 17%. So in this case, even though you had what you thought was a good idea, it isn't working at all. At this point, you can either let it go or continue on in what will inevitably be a time-wasting exercise. You should probably let it go. Now suppose that your stop loss strategy only slightly increased your average profitability and reduced your drawdown from 11% to 10% over all the testing periods. Well, perhaps if you adjusted the math in your trailing stop to either speed it up or slow it down, you could achieve better results. So after trying several changes to your formula, you find one that appears to work. You then go through your testing protocols and confirm the results that the change does make a difference. You can now move on with your next stage of testing. Remember, it's important to become familiar with how your system operates under various conditions. If you've just purchased a system, one of the factors to consider is spending some time with the strategy tester, particularly in visual mode. This is going to give you a chance to view various system components in simulated real time. You can confirm that signals are generated according to the published specs and watch entire trades from entry to exit. You can observe how the system's parts work together and watch it perform in trending, range-bound, and sideways markets. You'll also have the advantage of being able to go over the equity curve and performance statistics, and the strategy tester will be able to generate for you. If the results are favorable, then your confidence in the system will go up. So now you're aware that these three factors are the ones that you need to be aware of when conducting your own backtesting: the data, the start and end dates, as well as your purpose. Our next article will talk about optimization, so keep tuning in.